everybody, here is your test review as promised. It is going to be covering job order costing as well as just looking at some basic information that we look at for our cost accounting. So we're going to start out with looking at product versus period cost. Remember, product costs are those costs that are directly associated with the product. They are direct material, direct labor, and overhead. Then we have period cost. These are selling and administrative expenses. So what we're going to do is look through these and look and see what these different things are. So we look at office salary. Office salary is part of administration, and therefore this is actually going to be a period cost because it does not have anything to do with the actual manufacturing of this product. The next thing we look at is supervisor salary. Well, supervisor salary does have to do with the product cost because we are supervising people that are producing this product. But since they're not directly related and hands-on with this product, it is going to be a part of our overhead. Then we have our line workers' wages. These are actually, they're on the assembly line. They're actually manufacturing that product. So they definitely would be part of our product cost. And they're actually going to be part of our direct labor because they are hands-on. They're actually directly manufacturing this good. Then we have our depreciation for our factory building. Anything that has to do with the factory is going to be a product cost. And that is going to be an overhead cost is what we're going to be looking at there because it's not a direct material and it's not a direct labor, so therefore it have to go into that overhead. Next is depreciation on our delivery vehicle. Keyword here is delivery. That is part of that selling and administrative expenses, and so this is going to be a period cost is what we're going to be looking at. Then we have steel. So let's say that we're making an automobile. The steel would be a direct, it is a product cost because it is used in making this product. And so that would be part of my direct materials. Wheels are also part of that product and what we're making, and that's also a direct material item. Glue. Now glue is a material that we are using, and that is a product cost, but it's not directly traceable, or it's not easily traced to the product, and so that would be part of my overhead cost. When we look at rent, this is rent on the factory, so since it is the factory, it does have to do with my product, but it is not direct material or direct labor, so it would have to be overhead. Commission is part of my selling expenses, and so that is a period cost, and rent on an office is also part of that period cost. So you will have to be able to go through, look at a list of items and tell, is it period? Is it product? If it is product, then you're going to have to go through and tell if it is direct material, direct labor, or if it's overhead. So that's the first question that you'll be looking at. The next thing we look at are whether it's a prime cost or a conversion cost. And so you have to know how to distinguish between direct material, direct labor, and overhead to be able to answer this particular question. Now remember, prime cost are all of your direct cost. So we look at direct materials, we look at direct labor. So anything that's directly associated with the production is going to be part of that prime cost. Now with conversion cost, that is going to be the cost to convert your materials into your finished goods. And so those things are going to be your direct labor, also your overhead items. Another thing that you will have to know how to do is to figure out your predetermined overhead rate. And all we do there is we take our estimated overhead and we divide it by whatever our driver amount is. Now, for driver amounts, we might have direct labor hours, we might have direct labor dollars, we could have machine hours. These are all possibilities of drivers. In our problem that I have here, our driver is going to be direct labor hours. So what we see is that our overhead is 800,000, our direct labor hours are 80,000. So what we would do is we would take the 800,000, we would then divide that by 80,000, and what we get is $10 per direct labor hour. And so that is what we would find and how we would find our predetermined overhead rates. Now remember, predetermined overhead rates are what we use to allocate our overhead cost. And so when we get to looking at things like our job cost, we have given to us our predetermined overhead rate. And that would be how we would allocate those different costs. So if I wanted to know, okay, what is the cost for job 101? Well, what I would look at is I would take my direct materials and I would take that 10,000 and then have my time tickets, and that gives me my direct labor at 20,000, and then my overhead, it states, is 25% of my direct labor cost. So I would take this 20,000 here and I would multiply that by that 25%, and that is going to give me my overhead number here at 5,000. I then, to figure out the total cost for this particular one, is I would take and add it all up, and I would get that this job cost me $35,000. For job 102, pretty much the same thing. I would take the 5,000, I take 10,000. I would then have to take that 10,000, multiply that by 25%, and that gives me 2,500. And so my total cost for this one would be $17,500. And for job 103, I have 1,000, I have 2,000, 25% of 2,000 is going to give me 500. And so I'm going to be looking at $3,500 is how much that particular job would cost. Now, the other thing that you have to be able to do is you have to be able to look at it and see if it is part of work in process, is it part of finished goods, or is it part of my cost of goods sold. Now, remember, if it's been sold, so if you see something that says that it's sold, that is part of cost of goods sold. If it has been completed, but it has not been sold, that would be part of finished goods. And if it's still in process, that's part of my work in process. The other thing that you have to know are your equations. So you want to put these down on your index card that you can use for your test. So in looking at your equations, you will have to tell me what direct materials used is. So you'll be given something very similar to the worksheet, and I'm going to ask you this question. So you have to figure out direct materials used. You're going to have to figure out what your total overhead is, and that's just adding all overhead items together. You have to figure out your total manufacturing cost, which is just your direct material plus direct labor plus those overhead costs. You then have to figure out your cost of goods manufactured, beginning work in process, plus total manufacturing cost minus your ending work in process, and then also be able to use your cost of goods sold, which is your beginning finished goods plus your cost of goods manufactured minus your ending finished goods inventory. So you will want to use these equations and write these equations down so that you will have them to answer those questions on the test. The last part is going to be your extra credit for this test. Next test, you do have to know how to do it. And so what I've done is I have looked at different things like here where we make a purchase, because this is looking at my materials inventory here. And so when I make a purchase, my journal entry is going to be to debit that materials inventory because my materials inventory is increasing, and I could credit either cash or accounts payable depending on if I paid cash or if it was an accounts payable item. The second thing that I'll look at is this direct materials used. So for direct materials used, it's transferring from materials into my work in process account. And so I would increase work in process inventory by doing a debit. I would decrease my materials inventory by doing a credit. The other thing that I'll look at is in box 2 where I have my direct labor coming into it. Well, I have two different things. One, I actually have to pay for all of my payroll, and so that's that number 1 where I'd be looking at the factory labor and I'd be looking at paying for it with cash and have that account out there. Now the second one is where I am actually going to be putting in and be looking at indirect and direct labor. So my direct labor is what I'm looking at, and that's going into work in process. And my manufacturing overhead, that is really looking at that indirect labor items. So direct labor is going to be a debit to work in process. Indirect labor is going to be a debit to manufacturing overhead, and then they'll both go to that factory labor account, which will cancel out where I actually was paying for that labor. The next thing to look at are my actual overhead cost. So actual overhead cost. When I look at my actual overhead cost, remember those are going to always be on the debit side of manufacturing overhead. So these could be things like depreciation expense, utility expense. Any of those expenses are not going to be called the expenses anymore because they're going into overhead. So if you class something as a product cost, that is an overhead cost, it has to be journalized in this way, where you're looking at manufacturing overhead as the debit, and then your credits would be the same thing they've always been. So if it's depreciation, it's going to be accumulated depreciation. If it's utilities, utility payable. If it's something to deal with just a regular account, it could be accounts payable. It could be cash. There's lots of miscellaneous accounts that could go there for those actual costs. But we always want to look at those actual cost out there. Now, we know that with our overhead, we need to be able to allocate it. We allocate using that predetermined overhead rate. And so that's really what we look at when we apply overhead. We are looking at that predetermined overhead rate to apply it. The application of overhead is going to be on the right side as a credit, and then you can notice that this is my work in process account, and it is increasing. So when I increase an asset account, I increase it on the debit side, and then I of course have the that manufacturing overhead is going to be on that credit side. The next thing that we are going to be looking at is figuring out cost of goods manufactured. Cost of goods manufactured is where we go from our work in process over to our finished goods inventory. So we're increasing, our finished goods. We are decreasing our work in process. So the debit's going to be to finished goods inventory. My credit would be to work in process inventory. And then finally we get to that last thing where we look at all of our boxes, and we have our cost of goods sold, and this cost of goods sold, remember that's where we actually sell it. It's on its way to Walmart and all of that. And so what we see here is we are increasing our cost of goods sold. We are decreasing our finished goods inventory. So finished goods inventory would have to be the credit for this particular account. And then we have, of course, our sales entry. This is the same sales entry that we have been doing since Chapter 5 or in Chapter 6 in Accounting 101, where we have our accounts receivable as our debit, and our sales would be our credit account. One last thing we have to look at is this is, remember, an adjusting journal entry. So this is done at the end of the period. We have to make sure that the manufacturing overhead account is 0. And so in making that manufacturing overhead account a 0, we are going to have manufacturing overhead as one of our accounts. It either has to be debited or credited, and then cost of goods sold will be the other account that would have to be debited or credited. In this case, we are under applied because our actual overhead is $10,000, our applied is $9,000, so we've under applied. We haven't applied enough using our estimates. And so what we have to do is we have to make a journal entry to, really make this even out. And so what we'll see here in this particular case is I want this, to go to the 1,000, and that way I zero out like I need to. So cost of goods sold would be the debit, manufacturing overhead would be the credit. Now, if I were the opposite and I was over applied, which means if I applied more than what I'd actually spent, I would have to do a reversal of that entry because I need an amount to be on that side so that I now am at a zero balance. So I would have to debit manufacturing overhead, and I would have to credit cost of goods sold. Now, everybody remember, as far as your test is concerned, you can use a regular sized index card. So you can bring that in with you, actually use that during the test. I definitely would suggest having your different equations on there, having, that predetermined overhead rate equation on there, and have those things that you can use. Also, don't forget that you do have to turn in part 2 of the test to me when you go in to take the test. Good luck with all of your studying.